Italy's largest bank, Intesa Sanpaolo, has significantly expanded its crypto-related assets to $235 million in the first quarter of 2026, more than doubling from the $100 million held at the end of 2025. This move is detailed in a recent market update citing data from Cryptovaluta and marks a decisive institutional shift toward digital assets. The bank's portfolio now includes Bitcoin, Ethereum, and XRP, with the latter two being new additions to its holdings. Intesa Sanpaolo's Ethereum exposure is through the iShares staked Ethereum Trust, a product that allows the bank to earn yield on its ETH holdings. This approach is particularly significant in a low-yield financial environment, where traditional fixed-income investments struggle to provide competitive returns. The bank's XRP position is held via the Grayscale XRP Trust, with 712,319 shares valued at approximately $18 million. This allocation is notable because XRP has faced regulatory uncertainty in the United States, particularly due to ongoing litigation with the SEC. However, within Europe, XRP has encountered fewer regulatory hurdles, making it a viable option for Intesa Sanpaolo's portfolio. The use of a trust. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. Structure also helps the bank avoid direct custody issues, which is crucial for a regulated financial institution. Bitcoin remains the largest component of Intesa Sanpaolo's crypto portfolio, with the bank continuing to add to its existing holdings. This reflects a continued confidence in Bitcoin's role as a store of value and a hedge against macroeconomic uncertainty. In contrast, the bank has reduced its exposure to Solana through the sale of the Bitwise Solana staking ETF. This strategic move suggests a reassessment of Solana's position in the portfolio following a period of heavy accumulation. The decision to use staked products for Ethereum and trust structures for XRP highlights a growing trend among institutional investors to access crypto assets through regulated and yield-generating vehicles. This approach allows traditional financial institutions to navigate the complexities of crypto custody and compliance while still participating in the market. The move by Intesa Sanpaolo is significant not only for its size, but also for the breadth of its crypto portfolio. The bank's entry into Ethereum and XRP marks a diversification beyond Bitcoin into tokens with different risk profiles. And regulatory landscapes. The use of staked products and trust structures suggests a focus on compliance and yield generation. This development could signal a broader shift in how traditional financial institutions are approaching crypto assets, moving from speculative bets to more strategic and regulated investments. The bank's decision to reduce its Solana exposure may reflect a reassessment of the token's performance or regulatory risks. The sale of the Bitwise Solana staking ETF indicates a tactical move rather than a complete exit from Solana. The next signal to watch is whether other. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. European banks follow Intesa Sanpaolo's lead in expanding their crypto portfolios through staked and trust-based products. The continued growth of institutional crypto holdings and the adoption of regulated vehicles could influence the broader market's perception of crypto assets as viable investment options. The regulatory environment in Europe, which is generally more accommodating to crypto than in the US, may encourage further institutional adoption. The next signal to watch is how other major banks respond to Intesa Sanpaolo's strategy, and whether they follow suit in expanding their crypto holdings through regulated structures.